Welcome to Financial Strategies with Andrew Agemy in Connecticut and Daniel Agemy in Colorado.
The stock market has created a significant amount of wealth for investors today. And that's come about in basically two different ways that's occurred. Number one is the sequence of returns toward total return and growth of assets, of share price. And the other is through dividends and the compounding of dividends.
Absolutely. I think we should explore the power of dividends. I'm Daniel Agemy.
And I'm Andrew Agemy. You're listening to and welcome to this segment of Financial Strategies with Andrew and Daniel Agemy. And today's topic and title is Rediscovering the Power of Dividends. We're glad to have you back with us. And we're excited about today's show because dividends have created a significant amount of wealth for people. And when you look at the stock market and what the stock market has done over times, a good 50% of growth and return is from dividends. How could that be, Daniel?
I know it's kind of insane. And I think, part of the reason we called the show Rediscover the Power of Dividends is because this used to be a way people invested. If you look from, olden days, 100, 200 years ago, right? And you look at when they called wealthy people, they were people who had a lot of income, not necessarily a lot of assets.
Right.
And it's been forgotten, especially in, let's call it the last, 10, 12 years with all the quantitative easing and things like that, is people have really, and low rates, have really forgotten about dividends and income and what that can do for you, right?
Right. Yeah. Dividends are a beautiful thing. And people may not understand the term dividends and such, which the term the definition I like to use for dividends personally is you're part of the profits of the company. Now, technically speaking, it may not be that. It may be, depending what you're investing in. But you're getting money. The key is you're getting money from the company aside from what's happening to the actual share price or underlying investment. That's the key.
Right. This is one of the most dependable, sticky ways of investing, because once that dividend comes into your account, it's yours. Nobody can take it away. Nobody can tell you what to do with it. Maybe the government can tell you got to pay taxes on it. But if it's in a Roth, they can't, right? It's yours, right? And that's what's such an amazing thing. It gives investors a lot of confidence. And as you mentioned earlier, 50% of market returns. I think this would blow people's minds that, they look at stock market over, 150 years, 100 years, last 20 years, whatever time frame you want to pick. And it's amazing how the dividends have increased that return. And it's partly because of the secrets of returns, partly because of the reinvesting, it's partly because you can depend on those and you get those in good times, flat times, bad times, right? But that's a big part of where that wealth creation has come from.
Exactly. Because if you don't need the dividend and you reinvest the dividend, then you buy more shares. And depending if the share price is low, you're buying a lot more shares than if the share price is high, but you're buying more shares. And as you buy more shares, then you get more dividend. And it's compounding your money. It's growing the money the old-fashioned way. Like you said, Daniel, what people did back in the 50s and the 60s, 70s or 40s even, that's where people got and did money. This is old-fashioned. It's not anything new, but people forgotten about it because, with the 80s and the 90s, baby boomers investing in the stock market going from 700, a Dow going from 700 in 1980 to 11,700 by the year 2000. It just exponentially exploded. And so that was more of a share price growth, right? $10 share, $11 share, $12 share kind of thing. And that's what the stock market did. So people forgot the importance of dividends. And that's why we're talking today about rediscovering the power of dividends, because people don't know what people don't know. And if they didn't have parents or grandparents that said how important dividends were to their income. They don't know this. And not until they get in or close to retirement do they start thinking about it. And that's why we're trying to help people to understand how to have a good retirement through dividends.
And a crazy thing is, we talk about investors, maybe their parents, maybe their grandparents taught them about this. We speak to some who really get it. We talk
Right.
to others who they don't know the difference between, our equation, TR equals I plus 3, right? That's total return is made up of two things, growth and income. And they don't know where their total return is coming from. They don't know if it's coming from growth or dividends. And they don't know the difference between growth and dividends. They just see the portfolio went up or it went
Yeah.
down. And
Right.
so hopefully today in this show, we can kind of explain, dive more into that equation, dive more into the power of dividends and what that does to people's portfolios, how that can increase certainty, how that can decrease volatility and get people set up for a retirement that they can enjoy.
Yeah. Because retirement is all about income. And that's really what financial strategies is about income, creating income for people that people can have all the money that they need, more than enough money that they need to live the rest of their life, right? And more than enough income to be able to live the rest of their life. And so that income gets generated from dividends. Dividends are one of the best ways to create income. A lot of people think that withdrawing money is income. No, that's withdrawing. And that's sticking into your principal. Didn't your parents tell you, live off the interest, don't live off the principal? Well, that's what we're talking about. Live off the dividends, don't live off the principal. You're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is rediscovering the power of dividends. And dividends, as I said, are income. And we'd love to put a paper, a commission report that we have done for today's show. It's called Passive Income for Retirement, and how that you can get different ways that you can get passive income. And one is from dividends. And we'd love to be able to put this in your hand. You can have it for free. It's a 3-page report that I think that you'll enjoy, be able to educate you, because we believe that an educated retiree is a happy and stress-free retiree. So we want to educate you because people don't know what they don't know. So here's a way for you to know what you don't know. Call 800-725 7616 800-725-7616 for your free copy for passive income. That's for it by name, passive income. Daniel, dividends are a great way of being able to grow your money, but there's various ways we can do that. And as we look at the S&P 500, if you look at charts, right? We've done this before, gone back and look at charts over the past 20 years or whatever time frame you want. And there's been a lot of growth from basically going from $10 a share, $11 a share, or $100 a share to $125 a share, right? That kind of thing. But the problem with that is that if the market goes the other way, your 125 goes back down to 100, goes back to 75. But if you're getting dividends as well, that those are coming in and you buy more shares when it's $75 a share, that has exponentially exploded the market in the S&P 500 returns over time. So, they say the S&P averages 7-8% a year, and 2 or 3% of that is dividends, and 4 or 5% of that is growth. You take out that dividend factor, and you end up with a lot less money.
Yeah. And that's why this equation. And folks, if you're listening, you can write it down. The letters TR equals I plus G. And that means total return is made up of income and growth. Now, most financial people, most people in our realm, in our business, are focused on growth. Grow, 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 grow. And if you have 40, 50, 100 years to allow your money to grow, then you can just be in a growth model, and
Uh-huh.
over 100 years you will make money. There's never been, there's been 10-year periods where growth has not earned you anything. There's been 15 years. There's not been 30-year periods where markets have not grown. So that's why most people in our industry are focused on grow, 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 grow. The egregious part is there is many, right? Something around 10,000 people a day retiring. And once you retire, that time, that 100 years, that 30 years is not on your side anymore. And that's where you need to look at, okay, instead of focusing primarily like the store, like you just talked about, the S&P is maybe 5% growth and 2 or 3% dividends. You need to flip that around once you're in retirement, where you're focusing on the dividends. Maybe you can get 5-6% in dividends and 2-3% in growth, but you don't need the growth. See, that's the difference, right? Because if you're earning 5% in growth and you don't have the growth, can you live off of the 2% or the 3%?
Mm-hmm.
Yeah, and people say, well, I just won't take money on my portfolio. We work with a lot of people, folks, and they always need money, right? And the
Right.
most inopportune times.
Right.
Their lives, they don't stop needing money because the market took a 25% correction.
That's
But
right.
if you're collecting dividend, if you're using dividends, right, instead of having to sell assets, it doesn't hurt you.
Mm-hmm.
That's what the dividends are for. So we try to help people switch mindsets from growth first, dividends second, at least people in retirement. Okay. This is not for a 20-year-old.
Right.
This is for people who are serious about their retirements. Okay. If you're not serious about retirement, it's not for you either. But this is for people who are serious about their retirements.
Right.
And you switch to dividends first, growth second.
Mm-hmm. Right. When you say serious about their retirement and so forth, one of the things that we find when people get serious about their retirement is that their risk factor drops significantly, sometimes 50% or more. Where, when they were 20, 30, 40 years old, they were very aggressive. But now when they're 50, 60, 70 years old, they say, I don't want that kind of risk. I want to make as much money as I can, but I don't want the same risk that I had because I have too much money that I don't want to lose it now. I need it now. And that's what one of the power of dividends is. It's a way to reduce your risk if you're dependent upon dividends as opposed to growth, as well as increase the certainty of your returns and getting money from your money. And this is a way when you're in retirement, it's not that you need $1 million, $2 million, whatever, 3 million, 5 million. No, because you're not going to go out and spend $1 million or 2 million or 5 million, at that time. What you need is an income that is generated to allow you to have all the income that you need and more than enough income that you need to be able to last the rest of your life. Well, if you just joined us, you're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is rediscovering the power of dividends because people don't know what people don't know. And so we're here to explain some of these things that you're not going to hear from Wall Street and other places because it's not their motto. It's not what they're interested in doing as far as educating people. So we have a book that we'd love to give you to be able to educate you, help you to know what you don't know. And it's called Common Sense Income Strategies by our friend Michael Eason. This is going to be able to give you, it's an easy read book. It's going to be able to give you some good ideas about income and how income comes from dividends, interest, things like that you can depend upon no matter what's happening in the stock market, no matter what's happening in your portfolio. If you're invested for income, you're going to be able to be okay in retirement. And, we'll help you to be able to understand if you're ready for retirement and what your risks are for retirement. So call now for the next 5 callers at 800-725-7616, 800-725-7616 for your free copy of Common Sense Income Strategies. Call now. We'll be right back after this.
You're locked on to Financial Strategies with Andrew and Daniel Agemy.
AAA, I was at the airport the other day and I saw the longest escalator that I think I've ever seen. It just like went up and up and up and up. And I was like, what? All right. And there's some people on it and whatnot. And there was an elevator. And I said, you know what? Let's take the elevator. That looks like that will take forever to get up there. So we hopped in the elevator. And the elevator Doors wouldn't close. Wouldn't close, wouldn't close. Finally, they closed, and then we went down instead of up. And then we went up finally, and it opened on a floor that we weren't trying to get to. And then it went up, and we finally got to the floor. And I said to myself, I should have just taken the elevator. I like walking anyways. I could have just walked up the elevator. We'd get up so much faster.
The escalator.
Escalator.
And
I'm Daniel Agemy.
I'm Andrew Agemy. You listen to Financial Strategies with Andrew and Daniel Agemy. Today's topic is rediscovering the power of dividends. Welcome back. And Daniel, it's a great story. The escalator and the elevator, right? Wow. You get on the elevator, you don't know what's going to happen, especially if you're not paying attention to the buttons, right? How many times, you get, particularly today, you're looking at your phone and you go past your stop, right? Or either direction, right? And then it's like, oh man, I missed my stop, right? But with the escalator, it's much more sure thing, right?
You push the wrong button, somebody else pushes the button, right? You never know exactly where you are. And and when I was on there, I was thinking of this like retirement portfolios, right? If you take the buttons away and you just think, I want to get to the top as fast as I can, elevators can get up to the top of the building a lot faster than an escalator, right?
Yeah.
But they can also do a lot of funky stuff.
Yeah.
And you don't know when you're at the top if you take the floor numbers away, right? So if this is like your portfolio, you can watch it go up, 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 up. But if you ever want to use that money, when do you get out?
When do you take it out? Yeah, which floor?
Which floor? Right? We remove the buttons, we remove the numbers. You don't know where the top is.
Right.
You have no peripheral. You have no way of knowing. You don't know if you got out halfway up until you get out, or if you're at the top. And you don't know if somebody else is going to push the button while you stop and pull you back down, right? And I see this as market, right? The market. You don't know what's happening. You have no control. It's just doing whatever it wants. Compared to stacking returns. What is stacking returns? Now we get to our subject, right? Rediscovering the power of dividends. Dividends stack the returns. This is like the escalator, right? Going up. It might take you longer, but you're always going up. It doesn't stop. That's the dividends always coming into your portfolio. Now you could decide, I'm going to start walking backwards. This would be like maybe markets retreating or rates rising or something like this. But guess what? You have to actively be going down to not go up. If you stop, you go up. If you walk, you go up. And that's dividends coming into your account, because once those come in, they're yours and they compound, they stack, just like the steps on the escalator, right? You can't do anything except go up. It keeps driving you up. You can keep walking down, right? But it will go up, and eventually you'll say, why am I going down? And you'll start going up. And I think
good.
I was like, wow, this is pretty cool. This is a way of explaining to people how dividends and interest stack on top of each other.
Right. That's great, Daniel. I love that. When you say when you stop, you keep going forward, right? You have to actively work hard to not make money, to not go forward on the escalator. And that's what we're talking about. Dividends, you have to work hard not to make money. With dividends, what you're going to get. You see what you're going to get, right? On an escalator, you see what floor you're on. It doesn't matter, if the floors are numbered or not. You can count them yourself. With the elevator, you don't know. If it's not a glass elevator, you take the numbers away of the floors and the buttons, you don't know. And that's what the stock market is without dividends. But with dividends, you know where you're going, you know what floor you're on, and you have to work hard. And you say when you stop. So on an escalator, you could stop walking, or what I would say is you stop putting money in, right? Because like when people stop working, they stop putting money in to their accounts, generally speaking. And so when that's not, you're still making money. Or if you worked for an old employer and you left your 401k there and you stop putting money in, guess what? It's on an elevator. It's going up without, but you have no clue of what it's doing until, you pick that point in time when you say, okay, I'm going to look at it now. But if it's invested in, for dividends and interest, you're going forward no matter what. And this is, a huge mistake that people make. They'll leave companies, they'll leave their 401ks at the company. And if the market's not going up, they're not making any money. But if they're in an elevator, but if they invested for dividends, they're still making money, just like an escalator, still going forward. And it's a great example, Daniel. I love that you came up with that analogy. I think that I'm going to use that in my seminar. As you listen in Financial Strategies with Andrew and Daniel Agemy, today's topic is rediscovering the power of dividends. And why does Financial Strategies exist? Well, this show exists to educate people, because too often people are sold stuff and they don't know what they're sold. They are put in things and they don't know what they're doing. And we believe that an educated retiree is a happy and stress-free retiree, because people don't know what they don't know. So we love to educate you, and we want to give you a commissioned report that we put together for today's show. It's called Passive Income for Retirement, because in retirement, you need income. You need a check to replace the old checks. That's one of the things Social Security does, right? That's one of the things that pensions do for people. But many times people need more money. And when you turn, depending on how old you are, 73 years old, this is a new rule. You have to start taking money out of your accounts. And it's going to be better to taking it from income, from dividends, than from principal. So we'd love to put this in your hands so you can learn about this for yourself and discover it for yourself. Discover what we've discovered. 3 pages long. Call, ask for it by name, Passive Income, 800-725-7616. 800-725-7616. Call now. Ask for the report, Passive Income. All right? You're listening to Financial Strategies. Today's topic is rediscovering the power of dividends. Daniel, you and I have discovered the power of dividends. We love it. We're investing that way for ourselves. Even though you're so much younger than I am, you're still got that going. You got more growth orientation in your portfolio than I do. I have some growth, but I also have, my purpose is income, and you've got some income, but your purpose is growth, right? And so we got this thing going on, which is great. And so we've discovered the power of dividends. And, that's what we're always talking about, is what that can do for people. But, dividends, people think, people are clueless when it comes to the impact of dividends on keeping up with inflation, aren't they?
Yes.
Help us understand and rediscover the power of dividends when it comes to keeping up with inflation.
So, when we look at like, especially the 70s, right? And there's a lot of inflation, and the kind of mantra is you got to buy equities, because they're the best inflation hedge. They protect you from inflation. But if we look at what actually happened, the best inflation protection was dividends. Why? Well, they stack, just like we talked about. They stack, for one thing. So it compounds, and then you get more and more, and it's like that snowball rolling down the hill. It just keeps growing, standing on the
well, let's talk about how do they stack, right? Like let's give the listeners an example of how that stacks. Like with interest, compounding, right? When you're talking about stacking, you talk about compounding.
Yeah, it's stacking. So if you have $1 million portfolio and you could generate 6%, which is a very reasonable amount right now, that's $60,000 a year. So that means if markets go up, down, or sideways, just like we talked about with the escalator, it doesn't matter if it's going, like, if you're standing still, you're walking down, it's going up.
At the rate of 6% in this example.
At the rate of 6%.
$60,000 a year on $1 million.
$60,000 comes into your account. Well, now your account was worth $1,060,000. Now, it might not be that exact, because if markets went down, the portfolio might come down a little bit.
Right.
But
all
it's
things
like
being
the
equal.
escalator.
Yeah.
You might be walking down, but guess what? The thing's still going up. So you still got 60,000 new money that came into your portfolio. Now, the next year, that's another 60. But no, it's actually more, because the 60 now is going to be earning for you, right? So that's
Right.
probably about another $4,000 that you tacked on to that,
So $64,000.
right?
Nice. Yeah.
And if it went down, it's actually going to be more
Right. So
because you got
$65,000.
you got a
66.
better because now all those dividends came in, you were invested at better prices than what you did. So that's one way that dividends are a good inflation hedge. Okay. The other is typically when there's inflation, dividends get increased. Okay. Because
Mm.
these companies, right? Inflation means, and there's a lot of ways of looking at inflation, right? There's asset inflation, there's monetary inflation. We've had a lot of asset monetary inflation where the dollars that we have are becoming worth less. Well, when that
Mm-hmm.
happens, typically companies' earnings, there's more dollars coming in, which means they can increase the dividends. Yes, there's more expenses, but they have to increase those dividends. So we have companies that just continually increase, like, this year we've had companies increase the dividends by 15%, right?
Wow.
20%.
Mhm.
That's a lot more than inflation,
Yeah.
right?
Right.
So what's wrong with that? Now,
But let me just stop you. But stock prices have not increased to the same advantage point. I mean, they'd come up from where they were a year ago, but they're not where they were 2 years ago. So,
exactly.
but
That's
dividends
the
are
biggest
above where they were 2 years ago.
That's the biggest point. When people look at their year to date statement, it might say they're up 20%. It might say they're up whatever, but we're still below the area we were about 2 years ago. That's the elevator. Okay. It can go up and it can go. We made it up to the top and now we're not at the top anymore. The escalator is stacking. So you would have made 60,000, 60,000, right? And
Right.
now this year, 21 you would have made 60,000, 22 you would have made more than 60,000, and then this year you probably would have made 35, 40,000 so far this year.
Wow.
When if you were on the elevator, you haven't got back to where you were yet. That's the power of compounding. That's the power of
100.
stacking returns.
Wow. $150,000 since the market went down, started going down in January of 2022. Phenomenal. Phenomenal. Well, listen, we're all about educating you and our listening audience. And we want to give you today's book, Your Listening Financial Strategies, the Andrew and Daniel Agemy. Today's topic is rediscovering the power of dividends. In this book, Common Sense Income Strategies will help you to be able to rediscover and discern how dividends work and what they can do to your portfolio. We love to put this in your hand for free to the next 5 callers at 800-725-7616. 800-725-7616. Call now.
This is Financial Strategies with Andrew and Daniel Agemy.
So Daniel, I love your elevator story that you told earlier, but when it comes to heights, I don't like heights. I'm scared of heights. I don't like heights, right? So, the elevator for this segment, let's pretend the elevator is going up and then it opens up onto a little platform of maybe 2 feet, 3 feet wide. You know, I'm not getting off that elevator. That opens up. I'm not getting off that elevator. I might put a foot out, but I'm getting on the elevator and I am waiting for that elevator to hit bottom so I can get off onto the ground. I'm going to kiss that ground. I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. Today, we're talking about rediscovering the power of dividends. And AAA, I like how you changed that, or your perspective on that elevator escalator metaphor, right? Because I didn't even think about what you were talking about, how when you're on that escalator and you stop, that is like contributing to 401k. You stop
Right.
putting money in, right? It keeps going up. Whereas if you're contributing for your 1K and you're walking, it's going up twice as fast, or maybe even more than twice as fast
Right.
because you're
Right.
adding.
You get to the end a
Uh,
lot faster. Right. Good. Good point.
you're talking right now about you don't know exactly what you're going to get, right? Investor psychology. Um, we get scared. Investors get scared. This is a normal thing. Now, some people have advisors that tell them don't sell, don't sell. But the average investor has underperformed markets. Why? Because we have feelings, we have emotions. We're trading. Money is just a tool. We trade our time for money. Why do we do that? Not because we want little funny green pieces of paper.
Right.
Not because we want to go knock on our neighbor's door and show them how much money we have in our 401k. We don't care about money. People don't care about money. What they care about is what money will do for them, what they can buy, right?
Use it as a tool.
The experiences they can have, the people they can help, the security that they feel they have with money.
Right.
And the difficulty comes in, right? Where we put so much faith on that elevator getting to the top floor, knowing when to get off. But when it goes down or we stop a million times, we just get frustrated, right? We get frustrated because we want that money, because we see the things we want it to do. And when it goes down, it's scary. The psychological effect, like you said, it's scary. And so we just get off, right? Humans, they just get off at the bottom. Usually it's the bottom.
Right. And or get off sometime at least, right? And the thing, they say, history repeats itself. And why does history repeat itself? There's one thing throughout history that never changes, and that is humans don't change. Humans, like you say, we're emotional, we're psychological, right? We have these feelings, we have these things that even though the stock market maybe average return is 7%, investors' performance is about 2%, because we buy high and we sell low. We get off at the bottom instead of just a constant methodology, reducing the risk, increasing our return certainty by staying on that escalator and just taking on time, that we're always moving forward, even when it's the inertia to go backwards and to go down is difficult, but we're always making money, which is very key. And when you're in retirement or approaching retirement, the emotion, the psychology is significant, right? Because it's kind of like retirement is a mountain that we're climbing up our whole life. And when we get close to that retirement, 10 years, 5 years away from retirement, year away from retirement, we look over the edge and we say, hey, this is a long way up on this snow-covered mountain. This is scary, right? Because when we think about it, things are changing. Our schedule is changing. Our paycheck is changing. Our friends are changing. So many things are changing in our life at this point, and it's scary. And there's a lot of stress that's created with that. But one thing that eliminates stress in retirement is knowing that you're going to have all the income and more than enough income that you need to live the rest of your life. And that is something that creates peace. And when you have peace, you're going to be able to enjoy your retirement. So with that, if you just picked up listening to us, you're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is rediscovering the power of dividends. And you get dividends from stock market based investments in common stock. You get dividends from bond like instruments like preferred stock or bonds or various other things. But we have a paper that we put together for today's show, commission report, that will help you be able to understand. It's only about a 4-page investing for income in the stock market. There, you can still get on the escalator if you feel that you want to. You need to invest in the stock market. You can still get on that escalator while you're on. It's kind of interesting analogy, right, with the elevator and escalator, but the escalator portion will help you to be able to smooth out the elevator portion. So we'd love to put this in your hand. Investing for income in the stock market. Call 800-725-7616. Ask for the paper on income in the stock market. 800-725-7616 for your free copy. Today's topic: on financial strategies. Andrew and Daniel Agemy, rediscovering the power of dividends. Daniel, I love dividends. I love what they do for my clients. I love what they do for us. I love the stacking where, you may, in your example earlier, you're getting $60,000 one year, the next year maybe you're getting $64,000. Now you've taken in $124,000 over 2 years on $1 million. Still got the $1 million value there. And then the next year, that might be up to, $190,000 that of total, because you're getting $70,000 the following year. So it's a beautiful thing. These dividends eliminate or reduce the amount of stress people have, because they can reduce their risk. They can increase their return certainty. At the same time, reduce risk by 50%, if not more, of the stock market. And so it's like, why wouldn't you? You know what? Why wouldn't people do this? Because they don't know what they don't know.
Right. Yeah, nobody's teaching it. And that's why it's called, again, rediscovering, because this people used to understand this.
Right.
And it's been a lot more difficult the past few years, because there was opportunities, but there wasn't quite as many opportunities. Now there's a lot of opportunities because of where rates are. And it's really a wonderful time, because there's a lot of people retiring, and there's a lot of opportunity to create this income and lock in these yields, right? When we're talking about the psychology, right, of investors, there's a psychology of retirees, right? And they feel that up and down, up and down, up and down of the elevator, and it worries them. And a lot of them have a hard time articulating exactly what it is, but they don't want to spend their money. And the reason they don't want to spend their money is because they don't want to run out of money in retirement. It's a perfect reason. You don't know how long you're going to live. What's that thing? The ideal, like the guy's ideal thing is he writes his last check, he bounces his last check as he dies. That might be a cool thing to say, right? But nobody actually wants that, because you'd be living on pins and needles. There'd be no peace in your life, right?
Yep.
And
Exactly.
that's what happens when these people are retiring and they're worried. They may not be able to articulate it. They may have not put a lot of thought behind it, but why do they not want to buy that new car? Why do they not want to go on that vacation? Or recently we've seen a lot of people taking their families on vacation, because it's hard today to get everybody together and spend quality time. We have FaceTime, and we have email and text and all these things, which take away from spending time together with people we care about, right?
Right.
And so we've seen a lot of people decide they're going to take their whole family somewhere that they've always wanted to go and spend time together.
Right.
Some people are worried about doing this because they don't want to spend down their account.
Right.
And other people see the amount of income they're generating, and they say, I'm not going to spend my retirement savings. I'm going to spend my retirement income. I'm going to spend my dividends and interest.
Yeah. Yeah. And that's a very, when you spend your dividends and interest, you don't have to run out of money. I'd like to do, something. Maybe we do a show sometime on how to spend money and not, how to spend money and not run out of money in your lifetime, right? And then, I mean, we could call this show that, right? How to spend money and not run out through dividends, because dividends generate income. They're
a renewable resource.
Thank you. That's the word I'm looking for. A renewable resource. They're right. Just eggs. When you have chickens and you want to eat, as long as you have chickens, hey, will always eat your retirement because you'll have the eggs, right? But once you start killing the chickens, you're going to have fewer and fewer eggs, and you're going to run out of eggs. But as long as you just eat the eggs, you're in good shape. And that's what we're talking about when we're talking about dividends. Is being able to eat the eggs, because if you're in retirement and you have roosters, well, then you got to kill some roosters in order to eat, and eventually you run out of roosters. So that's what people are afraid of: roosters versus chickens. You're listening to Financial Strategy with Andrew and Daniel Agemy. It's time for us to take a break. But before we go to break, we want to offer you this book. On today's show, we're talking about rediscovering the power of dividends. And this book by our friend Mike Easom, Common Sense Income Strategies, will help you be able to understand the power of dividends in a more insightful way, more direct way. It's not a large book, it might be 150 to 200 pages, easy to read, and not in financialese. It's in a language that you can understand. Love to put this in your hand. That's why he's got the picture of the eggs on there. 800-725-7616 for your free copy. Next 5 callers at 800-725-7616. Call now.
You're locked on to Financial Strategies with Andrew and Daniel Agemy.
I love doing client reviews. And Harry and Mary came in not long ago, right? And I'm looking at Harry and Mary's accounts, and I was blown away. I couldn't believe it myself, what was going on. I said, Harry and Mary, I love this. You guys got $1 million. And, last year you came in and you're getting $60,000 a year of eggs, of dividends and interest from this portfolio. And I got good news to tell you that it is now $72,000 a year instead of $60,000 a year. That's a 20% increase. We've been able to get you a 20% increase in your retirement income. I mean, if you guys are still working, so if you get 3, 4, 5% return or increase in your pay, you'd love it, right? Yeah, Andrew, we'd love that. So with the 20% return, how's that look? Oh, Andrew, that's phenomenal. We're so happy. I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. Today, we're talking about rediscovering the power of dividends. And AAA, that's a fantastic story. That puts a big smile on my face because that's what we want to do. Is we want to give retirees, our clients, we want to take care of them. We want to increase those incomes. And we want to give them confidence that they can retire and stay retired.
Yeah, our friend Greg, his definition of a perfect retirement is have more than enough income to last the rest of your life, right? And that's what we're doing with some of these. Some of these people have more, they have plenty income. They have more than enough income, where people need $60,000 a year and they're generating $120,000 a year income. They don't need that extra 60 grand. And it's a beautiful thing to be. But some people in our listening audience might think that's kind of fictitious. Those numbers are too big. But this is the truth. This is what's happening. This is the power of dividends, the compounding, the stacking, money in the stock market doesn't compound. When you go from $10 a share to $11 a share to $12 a share, that doesn't compound because it could also go to 11 to 10 to 9 to 8. Whereas, like you said earlier, Daniel, when you get a dividend, you get $60,000 a dividend, you earn it, it's yours.
Nobody can take it away. Yeah.
So it's and then the following year it just builds on top of that so that it's not 60, maybe it's 65,000. And then the following year it's even higher. And like in my example that I started this segment on, it went from 60 to $72,000, 20% increase. That we see that. That's a true story. That stuff happens.
So yeah, there you go for inflation hedge. Inflation is up like these crazy numbers that we haven't seen in years. 9%, I think, was the peak, or 9.5%. And
Yep.
if your income went up by 20%, what's wrong with that? I mean, that sounds pretty good inflation protection to me.
Right. And this is a lot like the 80s from that standpoint, late 70s, early 80s, Dan. People were getting, inflation was 10, 11, 12%, double digit. It was terrible. But you know what? People in retirement really didn't care, because their CDs were making 15, 16, 18%. And as long as you're able to stay up with inflation and taxation and everything like that, who cares what inflation is? And that's what's happening today with our clients. We're taking them back to the 80s from that standpoint. Their assets may not be growing in that fashion, which it doesn't matter. Their income is. And then we can grow the money the old-fashioned way. To have that kind of increase, to stay ahead of inflation and taxation, phenomenal. It's a great and it's a beautiful thing. And that's the power of dividends and interest, is that you have it, you can depend upon it. It's something that's promised. It's something that's guaranteed, depending on where you're getting it from, as opposed to the stock market, the roosters that people typically invest in is not guaranteed. It's just hope. And hope is not a retirement plan.
Exactly. And I love when you were explaining, you said, who cares what inflation is in that scenario? And that's why we're always talking about that stress-free retirement. Because when you can say who cares, like who cares that inflation is 9%? Who cares if I spend this money? Because you know it's that renewable resource. It's generating, you know there's gonna be new 60,000. You know there's gonna be new $71,000 coming in your account. And that gives you confidence. And that's what a true retirement is about, having confidence, right?
Right.
That you can do the things you want to do, because we don't work our whole lives so that we can retire and worry about running out of money.
Right. Daniel, it's like, I was walking by a travel agency, and the sign in the window said, if you think you can't afford to fly first class, your kids will. And so many times, right? That's our mentality. We don't want to spend the money. We don't think we can afford it. Well, why wouldn't you fly first class? Well, because I can't afford, I can't afford it. Well, what if you could afford it? Who cares how much first class costs if you can afford it? And if you have the
Right.
interest, if you have more than enough income to pay for first class and still have money that you need and not run out of money, who cares? That's the power of dividends. You're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is rediscovering the power of dividends. We're just loving this stuff. We got a paper that we put together we'd love to put in your hand. So call us at 800-725-7616 for your free copy, Investing for Income in the Stock Market. 4-day page report, how you can make money no matter what's going on in the stock market in the world. The question is how to do it. And some people have financial professionals that are able to make money for them no matter what. Some people don't. Most people don't, unfortunately. Most people have financial professionals that are only making money for them if the stock market is going up. And unfortunately, the stock market doesn't go up all the time. It goes down or sideways most of the time. And only some of the times does it go up. But this investing for income in the stock market will help you be able to understand how you can make money no matter what and bring peace to your life, because we believe an educated retiree is a happy and stress-free retiree. So call for it. Call now. Ask for it by name. Income in the Stock Market, 800-725-7616. Today, we're talking about rediscovering the power of dividends on Financial Strategies with Andrew and Daniel Agemy. Daniel, we're just, we got a few minutes left in our show for today. We've been talking about stacking of dividends. We've been talking about how the compounding of dividends can add to people's performance and adds to the stock market performance like nobody's business. It's just a beautiful thing what occurs there. What do we need to focus on? We talked about the psychology, how it lowers dividends and promises and guarantees of dividends can lower people's stress in retirement. So the psychological protection that's there for them, right? What else do we need to talk about before we
Yeah,
as we wrap up?
let's recap, because we've talked about a lot of different things. Let's recap what the power of dividend investing is. And first off, it lowers your volatility, right?
Mm-hmm.
And you can and there's a wide range of dividend investing, because you can go from things that have no volatility, right?
Mm-hmm.
So this could be things like CDs or CD lookalikes, right?
Mm-hmm.
An insurance company kind of version of a CD. It's called a
Yeah.
fixed annuity, right? And these don't
Right.
have volatility, but they will pay you a fixed rate of return.
Mm-hmm. Mm-hmm.
And then we could go a little bit more. We could go to corporate bonds where you get more yield, um, but it's still in the guarantee. The company is guaranteeing you. It's contractually guaranteed. It's mathematically certain those returns.
Mm-hmm.
And then you can go a little bit more aggressive and more yield, and you can go into preferred stocks, right?
Right. Right.
Preferred securities, there's baby bonds, there's preferred stocks, there's a few different things. And we could do a
Mm-hmm.
whole show on that. But that increases your return a little bit more, it increases your volatility a little bit more, but it's still contractual. There's still a
Mm-hmm.
contract saying, we will buy this back from you at this point in time, this security, and we will pay you this much interest for as long as you hold this security.
Right.
And then we could go a little bit more aggressive, right? And we could go kind of into the BDC or the REIT category, right? And we
Right.
could go a little bit more aggressive and we could go into dividend stocks. And people can have a portfolio with all of these things,
Right.
or
Diverse.
they might just like one. Some people just want corporate bonds. Um, and each of them work a little bit differently. The dividends increase on some of them, don't increase on some of them. You can create your own TR equals I plus T, your own return. Because if you buy
Yeah.
bonds, you can buy them in a way where you
Yeah.
can mathematically have growth,
Yeah.
right? We can structure a portfolio where you mathematically have growth in your bond portfolio
It's a
because right now we
certain.
can
Yeah.
buy them under par
Right.
and collect your dividend. So it's
Yeah.
not hope anymore. You can mathematically understand how much you'll get in growth and how much you'll get in income. And so these are kind of some of the things that people can do to build one of these renewable resources for their retirement portfolio.
Right.
Um, we talked about how it's one of the best inflation hedges. And we talked about dividend investing increases the certainty of your returns. You know what's going to be coming in, right? And the psychological benefits that it has, where you can understand where your portfolio is and what you'll be getting, so you know how much you can spend, or you know you can cover your required minimum distributions.
Yeah.
Um, and I think that's a recap of some of the power that dividends and interest put into a retirement portfolio.
Yeah. And the thing that I can see people in the listening audience right now being like, "Oh, but my mind is bouncing off. How would I do all these things?" And that's why it's so important to be able to have a true income specialist. A true income specialist is going to be able to understand how to make this happen for you. And unfortunately, most professional financial people are not specialists, are not true income specialists. They say they can get you income, but they're not specialists. So they're not going to be able to do all these things. This is multi-million dollar advice, folks, that we're giving to people with less than multi-million dollars. And we'd love to be able to educate you further. If you have questions, you want further education, give us a call, 800-725-7616. You're listening to Financial Strategies to Andrew and Daniel Agemy. Today's topic has been rediscovering the power of dividends. Love to be able to have you check out our website at agemy.com, agemy.com. The two words Agemy, spell our last name of Agemy. Our past radio shows are on there, or any place that you listen to podcasts. They're there. Be able to get so that you can know what you don't know, and so that you can be an educated retiree. In order to continue to educate you, we have this book, Common Sense Income Strategies, easy read book that will be able to help you understand some perspective, how you can have the income that you, more than enough income to live the rest of your life in retirement and make sure that you don't run out. So call and ask for your free copy to the next 5 callers at 800-725-7616. 800-725-16, because people don't know what people don't know. And we believe that an educated retiree is a happy and stress-free retiree.